Hello and welcome back to my note. Today we're going to execute what's known in the British press business as a reverse ferret. We invited our guest on today to talk about the US non-farm payrolls numbers, which always come out on the first Friday of each month. But unfortunately the US government has shut down with the result that there won't be any payroll numbers. Fortunately, he's equally qualified to discuss the effect that shutdown is going to have on the dollar and on other currencies. He's BNY Mellon's chief forex strategist, Simon Derrick. Simon, thanks very much.
John.
Now, let's start by taking a look at a chart which shows where the dollar is going on a trade-weighted basis, and that's compared with what you always seem to think is very central to this, which is the cumulative flows coming through BNY's system.
Yeah.
How much damage is this going to do to the dollar, and how much damage have the other various examples of political misfunction done to the dollar?
Well, purely political misfunction. I mean, I think if we look at the United States, it's tending not to have that much of an issue, but there is a difference here, and it's the fact that it's not just about government shutdown, but it's actually about the potential for a debt default later on. So it's a rather different story. The flows here actually, I think, yet really to show any major influence of that potential impact.
Right.
Most of the flows we've seen so far have really come from late August, early September, and they're probably actually to do with the last non-farm payrolls number and the expectation that tapering would be pushed back, which of course it was.
Right.
Now we have a rather different story, and that different story is connected to, as you said, the fact that with no data at all to come out right now.
Now, let's take a look at a country for which we do have some data, which is China, where all kinds of interesting arguments about how much we trust this data, but here we're looking at Chinese foreign exchange reserves, and you can rather clearly see a trend emerging that they are not building up at anything like the rate that they were before. How does that tie into the dollar?
Well, the important thing is here that over the course of the last few years, diversification of dollar reserves by China has been an important process in driving a large different parts of the foreign exchange markets into currencies like the Australian dollar, the euro, as we've discussed many times, sterling and others. The interesting bit is over the last couple of years, that reserve growth has declined, and in part that's because investors were more attracted to keep their money in the United States as it grew.
But is it also because they were worried about the last debt ceiling argument in the summer of 2011?
They were, and that was the other key part of this. And one of the key stories that you have seen since 2011 has actually been the fact that China has been pushing the pace of liberalisation because they are worried precisely about the fact that the US seems to play fast and loose with both monetary policy and fiscal policy as they see it. The fact that we've now got the debt ceiling debate taking place, the fact that monetary policy tightening is being pushed ever further into the future, probably just pushes China along to make a change, to push that pace of liberalisation. And once they're liberalised, then they've no need to accumulate foreign exchange at any reserves, at anything like the pace they have been doing.
Which presumably is not good for US assets. Now, let's quickly take a look at the stock market. This is the cumulative flow into stocks, again, as you're seeing coming over your systems. And that suggests that we're in something of a Wile E. Coyote moment at the moment. The stock market is still going up, but the flows have gone into reverse a few months ago.
And that is the worrying bit. This actually shows the flows of international investors.
Right.
So again, there's a dollar impact here. And one of the things that always worries me is I'm seeing flows moving in a very different direction to the price, because it tends to suggest that actually what we're moving on is hot air.
Right.
Now, doesn't mean that the price can't go up, it doesn't mean that investors can't start buying again, but what it says is the sentiment right there is not there to support what's happening in the US market. And of course, if the story with the US debt ceiling debate goes from bad to worse, we suspect it won't, but let's imagine it does, there's an awful lot of space for that market to start falling.
Thank you, Simon. That was not exactly a cheery prognosis, but at least Wile E. Coyote is still walking on thin air for now. It sounds as though the big risk that he finally falls could come if we see renewed brinkmanship over the debt ceiling later in the month. For now, even if there are no non-farm payroll data to look forward to, at least there's still the national pastime on which our US viewers can rely. Enjoy the baseball playoffs.